All right, let's talk crypto. Have you ever wanted to get in on the action, but without all the headaches of actually buying and holding the coins yourself? Well, today we're diving deep into an exchange traded fund that tries to do exactly that. The ticker is CRPT. Let's see what makes it tick. So, this is the big question on a lot of people's minds, right? How can you get a piece of that crypto growth potential, but skip the stress of trying to pick the next big coin or worrying about crypto wallets and private keys? It's a real puzzle for a lot of investors who are curious, but also cautious. And there's a good reason for that caution. The crypto market is an absolute minefield. I mean, it's just littered with thousands of projects that went nowhere. For every huge success story, there are just countless failures. Trying to pick the one that's gonna moon, it's a massive gamble. And let's be honest, most people just don't win that bet. But what if there was a different way to play it? Think back to the gold rushes. The folks who consistently made a fortune weren't always the ones digging for gold. A lot of the time, it was the people selling the picks, the shovels, the wheelbarrows. This is what we call the picks and shovels strategy. And it's a really smart way to think about today's digital gold rush. This really breaks down the two main ways you can approach this. On one side, you've got direct coin investing, a super high-risk, all-or-nothing bet on one specific asset. But on the other side, you can invest in the entire ecosystem, the exchanges where people trade, the companies that mine the coins, the tech that makes it all possible. You're not betting on one gold miner, you're betting on the entire gold rush. And that ecosystem strategy? Well, that is the exact idea behind the First Trust SkyBridge Crypto Industry and Digital Economy ETF. You'll find it under the ticker CRPT. This fund is built from the ground up to be a pure picks and shovels play for our modern digital world. Okay, so if it's not actually buying Bitcoin or Ether, then what is it buying? Let's pop the hood and take a look at its actual investment strategy. How do the managers decide where your money goes? So the fund has some pretty clear rules it has to follow. The huge majority of its money, at least 80%, has to go into companies in the crypto and digital economy space. And then at least half has to be in what they call crypto industry companies. But that last point is the absolute key. The fund holds zero direct crypto. None. It's all an indirect play. So what exactly is a crypto industry company? Well, according to CRPT's rules, it's one of two things. Either it's a business getting more than half its income from the crypto world, think about exchanges like Coinbase or the big crypto miners, or it's a company that's holding a ton of crypto on its own books, like MicroStrategy. And then there's the other part of the portfolio, what they call digital economy companies. This casts a much wider net. We're talking about the foundational pieces of our digital world: online banks, brokerage platforms, payment processors, and even the companies that make the computer chips that power this whole revolution. Now, this brings us to something that is absolutely crucial to understand about this ETF. This thing is not on autopilot. It's not a passive fund that just tracks some index. No, CRPT is actively managed. You've got real people in the driver's seat making calls every single day about what to buy and what to sell. And if you look at their official documents, the prospectus makes the goal perfectly clear. The objective is capital appreciation. That's just Wall Street talk for we're trying to make this thing grow. The team over at SkyBridge is actively trying to pick the winners and losers in this space to make the fund's value go up. And if you want proof of just how active they are, just look at this number, a portfolio turnover rate of 318%. That is unbelievably high. It means the fund's managers are constantly buying and selling. They're churning the portfolio, trying to get ahead of this super volatile market. This is the complete opposite of a sleepy buy and hold strategy. So, what happens when you mix that aggressive, hands-on management style with one of the most volatile sectors on the entire planet? Well, you get a performance chart that looks less like a chart and more like a roller coaster. Seriously, buckle up for this. Let's start with 2022. You might remember the brutal crypto winter. Well, this fund got caught right in the blizzard. Its value just plummeted. By the end of the year, it was down a staggering 80.75%. I mean, just let that number sink in. That is an absolutely devastating portfolio-crushing loss. But then, look at what happened in 2023. The very next year, as the crypto market came roaring back, CRPT didn't just recover, it exploded. It posted a gain of over 193%. It's just an almost unbelievable swing in the other direction. I mean, this chart says it all, doesn't it? You couldn't ask for a more dramatic picture of high risk, high reward. From a catastrophic loss one year to a spectacular, life-changing gain the next. This is the very definition of extreme volatility. Okay, so after seeing a ride like that, it's pretty clear this is not an investment for the faint of heart. So what's the final verdict here? What are the key things you absolutely have to remember if you're even thinking about this high-stakes game? Let's just boil it all down. 1, it's a picks and shovels play. 2, it is actively managed with super high turnover. 3, that active strategy has led to just insane volatility. 4, it's heavily concentrated in just 2 sectors, tech and finance. And number 5, this is a big one, it's a non-diversified fund. All that means is they can make really big bets on a small number of stocks, which just juices up both the potential gains and the potential losses. And that brings us right back to the question we started with, but now we have some really stark numbers to go with it. After seeing the strategy, the huge downside risk, and that explosive upside, is a potential 193% gain worth the very real risk of an 80% loss? Well, that's a question only you can answer for yourself.